Hi, welcome to the Coastal Business Channel. Today we're going to talk about fundamental analysis. So I don't know if I did this backwards or forwards. You can tell me if you want to leave me a comment. Please subscribe. I just like 10 videos didn't ask anyone to subscribe, but it would be nice if you did. Anyway, portfolio management process and asset allocation was my next model. So fundamental analysis generally is used for equities, but you can use it for bonds too, and mainly because you're doing fundamental analysis on the company. So fundamental analysis is going to get me to my company and what companies I like and don't like. And then from there, I might do some work on free cash flows to figure out the valuation of a company. So here goes. So for fundamental analysis, the first thing that I want to do, and it's actually playing into, this is January 2023, into what's going on right now in the stock market. I want to understand the economy. So right now we are in a high inflationary period. We have a very tight labor market. The Fed is raising rates and the stock market doesn't like it. So what happens when you raise rates and the interest rates is rising? A lot of companies that have debt, it is costing that company more to service that debt. And if it's costing them more to pay the debt or the interest payments on debt, then they have less money that's going to flow down to net income or earnings, or ultimately earnings per share. So when earnings per share goes down, right, the stock price is going to go down. So that's what's going on right now. What we've heard at the beginning of January and my beginning of the year email that went out to my clients is that the Fed was likely going to curtail raising rates probably in February, if not March. Well, economic data came out tight last week. So guess what? Now they're saying the Fed is going to continue to be raising rates, past March, maybe into April or May. It might be the entire first half of the year. Is unknown. So right now, when it comes to fundamental analysis, to me, it's changing. Like it's changing each week. What I think is going to go on in the economy and the stock market is changing literally each week, or what the Fed's going to do and all of that. So I better devise or have portfolios for my clients that are okay in a raising rate environment, or that they have such high capital gains. If we were to sell positions, that we're okay selling a position because we believe in these companies and they're solid companies, like Microsoft, for example, that 2 years from now, we want to own Microsoft. So we're okay with, having the value of Microsoft go down in a portfolio right now, because in the end, we believe it'll do well. So now that I know what's going on in the economy, I'm going to look at different sectors, right? What sectors do well in a raising rate environment, or a labor market environment, or really what companies do well in the environment we're in. Growth stocks generally do well in one type of environment, value stocks in another, small cap in certain situations, large caps in others. So you need to kind of know, okay, this is the economic environment we're in. What sector does well in these economies? So now that I have the sector, right? So fundamental analysis is you are looking at, or we could start at the bottom, right? We're starting at the bottom. What's the foundation? The foundation is the economy. That's the foundation in the United States. Then what sectors, right? Next we have what sectors do well. Then when you have the sectors that do well, right? What are the companies, right? What are the competitive environment in that sector? What companies do better? What companies do worse? What's that company's position within that sector, right? So you have specific companies do better, certain do worse, but you also have certain, let's say we're going to take bars of soap, right? You have generic bars of soap and you have luxury bars of soap, say, or shampoo or whatever, right? You have the high cost, high price, lower volume luxury. You have the mass produced, really less expensive, and then you have commodities. Milk is more or less a commodity if I'm going to stick with like the food at the grocery store, right? So you're going to be buying milk, milk that's from Tuscan versus, ShopRite versus Publix. Like, yes, there's difference with, now you have grass-fed milk, which was interesting because it's not grass-fed milk, it's grass-fed cows that produce the milk, right? But then you have organic milk, right? You have eggs, and then you have like cage-free and organic and all that kind of stuff. But, the basic egg is the basic. But you want to see what your company is producing, where do they fit in that? How are they going to do, right? If you are the luxury in an environment where we're heading into a recession, that company might not be doing as well. So that fundamental economic analysis that you do, and then when you do the industry, and then you're getting to the company specific and where they fit in that industry, you have to go back to the economics and see how is it going to affect that company. So to me, and then you have your company analysis and how the players do, and you figure out which ones are going to trickle to the top because they're going to be doing better in that economic environment you have. Fundamental analysis to me is you are looking at the fundamentals of our economy, you're looking at the fundamentals of the different industries, and you're looking at the fundamentals of the company. Where does that company fit in within that industry and within that economic environment? And you are circling back, because guess what? That economic data, like one day the economic data is great. Well, I shouldn't say great, inflation is decreasing and employment wages are stabilizing and the economy shoots up, and the next day it's like, no, it's not, and then it goes down. I need to, keep in mind the fundamentals of the economy, but I also want to say the stock market is supposedly priced what happens 12 months from now. I can't tell you it's necessarily doing that. I feel like it's pricing what's going on 3 to 6 months from now. Is the Fed stopping raising rates in March, or is it going to be June? But they're looking out. So how is that going to play out to the companies that you're investing in? So fundamental analysis, fundamentals, foundation of the company, foundation of the economy, foundation of the industry, foundation of the company, and you're building yourself up like that, but you're always trickling back down. I hope this was helpful. Thank you so much for watching.